Hi everyone, welcome back. Darren Green here from Mila Homes. So today we're going to talk about assessing demand, and this is something which is we're going to go quite in depth, and I'm actually going to show you more around how you actually go about assessing demand. So we may run on more than 10 minutes, and if we do, I guess it will be for good reason. So let's get into it. So regardless whether you choose buy to let or flip, so we touched on what strategy you're looking for. Generally they boil down to, do you want to buy and hold the property and have it giving you relatively passive income for a period of time, or do you want to buy property, do something to it to inflate the value and then sell it? So for buy to let, assessing demand, you need to be making sure you've got rental demand. So can I get a tenant in there? And you also always need to be aware of done up value comparables. So if I'm looking to invest and inflate the price of that property and then refinance that at some point, so it's something that we do. We buy things with cash from our private investor clients. They give money to us to invest. We then give a fixed rate return to them, but we need to make sure that we make money when we buy. So we buy it at below market value, 20% discount, and or at least 20%. We will then inflate that value through doing a refurbishment, and then we'll finance that once, and generally, it'll be on a 5-year product, 5-year fixed product for us. But it's really important when we get a surveyor out to finance that property, do we get for it what we expect? So therefore, being able to look at the done up value comparables within a quarter-mile radius is really, really important, and I'll come on to how we do that. For flips, it's a likelihood for capital growth, so that's what you're interested in. Rental demand, you don't really care. It might have some issue in terms of the relative demand in that area in general, in terms of what the mix is between rental and ownership, but in general, you want to understand, will someone be able to, do I think that this property will grow in value in this area? Property churn rate, I'll come on to that. This is the number of properties that sell or are about to be sold, i.e. subject to closing or subject to contract terms, and relative to all of the properties that are available for sale in a particular area. And I'll come on to why that's important, because obviously if nothing's selling in your area and the churn rate is relatively low, then why would you expect that your confidence in terms of being able to sell that property that you're going to buy should be less, because the rest of the market clearly looks like it's quite a cold market. No one really wants to be buying property there. And then equally with buy to lets, done up value comparisons are really important. So we're going to get into a quick demo here. So as you can see, I've got Rightmove open on the screen. I'm looking for properties to rent in Dunfermline and Fife. So just go to Rightmove, enter in the area that you're looking for. You can put a search radius around it, take you to this screen. Price range, if you want to change the price range, you can. For simplicity, I've left it full for this. I'm looking for 2 beds, so I've put minimum and maximum number of bedrooms to 2. I'm only interested in houses loaded any time, and crucially, even if they've already been let, I'm also interested in this because I'm looking for demand here. So 495, 565, 575. You can see it's quite varied, 520, 550, 550, 595. Already from that I'm saying, look, everything's above 500, 550 feels a very conservative estimate in terms of what rental demand will be here. Flip it into map view, because I think this is important. You need to know your local area. So Dunfermline, for example, don't actually invest anything in any property over there, but I've been brought up there, so I know the place relatively well. And you can see it varies, 575 there down at the bottom of the town, and then 530 down at Abbey View and Took sort of area. So I think 550 feels like a reasonable estimate, but really depends where it is in Dunfermline. It could be well over £600, so it could be £600 would be an easy rental demand figure. But certainly plenty of things to rent, and you can be confident that you could get in excess of 550 from any sort of property down there. So if I want to go on now, so the second thing that we're going to have a look at is how to assess sale prices or sold prices. So we're back on Rightmove, very similar to before. You go to house prices, drop down to sold house prices, and you actually just drop in the name of the area that you're looking to view. So we're back in Dunfermline again, lo and behold. You can choose a radius around that. You can, and what we're really interested here is the last year, and we're only looking for residential properties. So the reason we're only looking in the last year, if something sold 6-7 years ago, what difference, what relevance is that to what you're going to sell your property for right now? And that's whether you're looking to refinance in 6 months' time, or if you're looking to sell it, then really it doesn't make any point looking for anything else. So what we're looking for 2 beds. So there's one in Morlock Grove and Dalgety Bay. It's not really Dunfermline, so we'll keep looking. So we'll keep going down. 2 beds. There's a flat in Mid Beveridge Well, which is Dunfermline, but it's a flat. Gives you a feel, 70,000. So it really depends where we've purchased. But you get the idea. You can go through quite a few pages in order to see what your comparables would be, and you're always looking at what sold in the last year. So there's another one there in Crossgates, which is closer to Cowdenbeath Cottage, but again gives you a feel, 125,000 there, sold in October. There's one down in Don Road and down in Abbey View, which is not one of the best places in Dunfermline. I mean, you can see the difference there. A two-bed house, a difference of 50 grand, with probably less than a mile distance. So you do need to get honed right into where your property is. I would always err on looking at around a quarter of a mile or half a mile at the most from radius from the street that you're actually purchasing, because you can see their prices can vary very or quite a lot. Another useful area where you can find information around house prices in your area is the Nationwide House Price Index. So Nationwide obviously is the building society, this is their website, but actually if you just Google House Price Index, then generally that will come up. And you can download data here going back to 1952. Some of the regional data is not available for or is not available until much later, but you can see it goes down to kind of new properties, modern properties, and you can break it down actually to the type of property as well. So is it a terraced flat, semi-detached, detached, etc. There's lots in there, and yeah, if you're a bit of a data geek like me, then you can download that data, create all lots of charts for your particular area, and see whether you're trending upward or not. Another one that's useful is Zoopla. So Zoopla will drill down into a much more granular level. It will actually go to postcode level, and you'll be able to look at particular streets. So there's Carnegie Drive in Dunfermline, for example, and I'm looking at market activity. I'm interested in most recently, but let's just say last 6 months for this example, and any property type. I'm looking at semi-detached properties because that's what I've been looking at so far in this demo. And you can see there, although there's nothing sold in the last 6 months, average value is 165 and the value change is 3.5 grand or 2% in 6 months, which is pretty good. So, this is me recording. I'll just talk over it, yeah. The last one I'm going to touch on here is how you find the churn rate. So how do I know if there's things selling in the area that I'm buying? So again, we're back on Rightmove. We're looking to buy, so we'll go properties for sale here, and this is very similar to the other methods that I'd shown before. So we're back in Dunfermline, and we're leaving the first couple of options blank. We're still looking for 2-bed houses. We're interested added to site anytime, and we include the under offer sold subject to contract. And we click find properties. And so I'm just going to scroll through these very quickly here, but you can see the first couple. Oh, there's one under offer, and what we're looking for is under offer or sold subject to contract. So one that I've highlighted there, so that's 1 and about 5, that's 2 and 5. There's another one sold 3 and 7 or 8. There we go, 5. So I mean, we've gone through about 12, 13 properties there, and about 7 of them are Some of them are subject to contract or sold. So really for this, and everyone's different, but for me, I'm looking for about 50%. So if you think if you're looking to flip a property, if you can see that if you're going to search in that area and around half the properties are that are available for sale have been sold subject to contract, or they're under offer, then that means that there's relatively high demand in that place. There's good throughput in terms of houses. So that's that's generally all you're looking for there. That's as simple as it is. There's no great science to it, but it's an important way to be able to check and see if there's demand in your area. So that's it. Again, we've run over a bit of time, but hopefully you found that useful. And as always, if you want to get in touch around either this topic or anything else that we've discussed, then just get in touch and I will see you tomorrow.